If you've ever had a trade plan that worked out exactly to the penny on either the entry or the exit, go ahead and hit that like and subscribe button, folks. Thank you for joining us. Welcome to another webinar. Happy Friday. We made it to the end of a crazy week. It is my pleasure to have you here today. We are doing another webinar focused on the Strat. This with Jermaine, aka CyberDog on Twitter. You've probably seen him around. He's got some of the crazy memes out there that are absolutely hilarious. Today, our focus on the Strat is going to be how you can actually execute this strategy using a small account. A lot of people feel like in order to trade some of these strategies, they need to have more money. They can't day trade because they're under the pattern day trader rule, whatever the case is. So the Strat is one of those things where you can actually do that even if you do have a small account, even if you're just starting out. So that's what we're going to cover today. We're waiting for Jermaine here. Jermaine, if you can hear me, go ahead and turn on your camera and your microphone. There he is. What's going on, my man?
Hey, how you doing?
I'm doing all right. How are you doing?
Good, real good. I wasn't going to do it until you said unmute. I follow instructions.
That's right. That must be the army in there for you, for the following instructions. By the way, before we get started, thank you very much for your service, Jermaine. Really appreciate that. You are the ones that help keep us safe. So without further ado, let's just jump right into it. Let's go ahead and tell me how you got into trading real quickly, and then also how you found the Strat real quick.
Okay. I got into trading about 2 years ago. I started, one of my buddies at work showed me how to get in on a very easy platform. And what he showed me how to start an account, how to put money in it, how to buy stocks, where to go. And it worked out really good for a while. And then I got to a point where I started wanting to make more money. So he showed me some other tricks. Okay. And this platform, you can guess what it is if you want, but this platform made options very easy. So I started learning options, and I'm reading and I'm doing all this stuff. And so I was like, I got to the big reason why I wanted to do this is because I got to about $500 in my account, and that's what you and Dee Dee said in Dee Dee's interview, that you guys started with a $500 account and it got wiped out. So keep me on task here because I don't want to ramble. But he showed me how to buy calls and puts into earnings reports. I got one that didn't work out well. I lost $236 on Twitter working into a earnings report. So
yeah, I feel your pain there, man. I bought Apple calls ahead of the print yesterday. So I'm going through some pain today. That's part of it though. I mean, you have to accept that. You have to know what you're getting into ahead of time. I knew I was trading around a binary event. I was prepared in case I lost. I did in fact lose today, but that's okay. That's going to make me stronger. All of those lessons make you stronger. So
Yep. And so when I did that was a big thing for me. That was a big hit for me personally, because that's like half my account, right? So then I stopped trading for a little bit, not quit, just stopped. And then I was then I started going through the internet, any kind of, who can help me? Coaches, mentors, who can help me? And for some reason, Forex people really love Instagram. There's a lot of chart patterns and all this crazy stuff on Instagram on when you should get in. And so I'm soaking that all up. And I found a post about the Strat reversals. And in that, all right, so I think it's another one. It's like, but there was an article attached to this one. So I'm reading this article, and it was called What Do We Know to Be True About Price Action by Rob Smith. That's a new Trader U article. And I learned more in that one article than I have learned in anything else I was seeing on YouTube. And so I started I started looking on YouTube for Rob Smith, and I got into a rabbit hole on YouTube, and I was finding like really old videos, like 2007, like really old grainy stuff. Also, I thought I was finding like some secret things. And, but anyway, I found Rob. I joined his service. I at his old company he was at, I bought the course. I learned, I let him teach me how to get in, why are we getting out? I let them tell me, why are you doing that? There's no actionable signals in this. Why are you doing this? So I want to help anybody else with a small account build that up and protect their accounts. That's why I'm here.
Okay, awesome. I love that. And I'll be honest, I get questions all the time from people that say, I have a small account. How can I do this? How do I protect my losses? How do I do this and that? And a lot of the times, especially when someone first learns about the market, a lot of times they end up seeing a chart. So they try to teach themselves technical analysis and all of that. And they see a line that says, this is support, this is resistance. And they think about it as just one like finite point. And if it goes below that, or if it doesn't work, then they're like, well, what happened? And so I mean, to me, it's like when you have a small account, you have less leeway. You don't want to take big losses. You really got to protect your capital, and you have to understand what's happening. So if a stock pulls back into a support level and it goes right beneath that, what exactly does that mean? How did you define that support level, et cetera, et cetera? So I get asked questions about that all the time. I'm really, really excited because it seems to me that the strat is a way to kind of remove your emotion from trading and just let the process take over. And I'll be honest, a lot of the successful traders that I've heard, whether they're strat traders or otherwise, they are always telling me that as long as you can get rid of your emotions, as long as you can stick to a plan, as long as you can become consistent, you can actually be profitable in this business. And that's not about promising millions of dollars. It's about becoming profitable and getting better every single day. So I get questions like that all the time. I'm really, really excited to go into this. Let's jump right in. I do want to say for everyone that's joining us here, two things. Number one, yes, there is going to be a replay of this available later this evening. Number two, Jermaine was kind enough to create a PowerPoint for this presentation that we're going to run through. And there's a ton of information in it. We might not be able to cover all of it in the hour time slot, but I am going to include the PowerPoint in the email. It'll probably be a link to the actual PowerPoint itself. So you'll be able to keep this PowerPoint, go back, and then reference it when you're actually watching the replay. So if you feel like we're going through something too fast, I apologize. Just remember there will be a replay, and we will share the PowerPoint with you so that you can go back and learn it at your own pace. So without further ado, Jermaine, let's go ahead and jump right into that here. I'm going to go ahead and share my screen. And I'm going to pull up that's the splash screen. I'm going to pull up the PowerPoint. So this is the PowerPoint that you made. And my favorite part about this already is that the very first slide, the heading on the very first slide is protect your account and your profits. Super well said. Probably the most important thing that any trader is going to do any single day. So go ahead and let's start walking through this.
All right. Then keep me on task because I can talk about the strat all day long. So
I will
keep saying that. Okay. So, and I'm not going to read, there's a lot of information on these slides. So I'm just going to briefly go through them all. I'm not going to read everything that's on the slide. So if anybody's wondering why it's not transcribed, I'm not saying exactly word for word what's on the slide. This is for when you later on, you can read it and you can retain it and know they're comprehensive and you know what's going on. Okay. So how many people has this happened to? Here's your entry right there. There's that yellow arrow right there. There's your entry. You get in, you got something that works. You're happy about it. It goes up that first hour, that second hour, it's going well. That third hour is kind of wonky, kind of doji-ish, but that next hour is going well. I don't have nothing to worry about, right? Then people start taking profits. That candle right there, and you're like, it might still work. I'm fine. So you go do what you need to go. Maybe you can't stare at all the charts all day long. So you come back to it later on that day, and now you're still holding. Now you're way down here. Now you're losing money. And some people tell you, well, just hold on. It's going to come back up. If you look at this little green arrow right here, that's a 2-2 reversal. And the strat's going to tell you, cut it right there. And that's what I'm going to show you how to do. You got in on your entry. You did good. You found a stock that's working. No matter how you found it, it's working. You got in on the right time. You got a good fill, all that stuff. Everything's great. You made profit. Now, how do we protect our profits and not give it back? We see a reversal like that. Bam, I'm getting out of this thing. And I don't need indicators. I don't need to learn a bunch of technical analysis. All I need to do is trade on what I know to be true right now. Right now, this thing's dying. I'm taking my profits.
All right, good stuff. So let's go. I'm sorry, let's go ahead and review some of that real quick. So I'm going to go to the next slide here. We're going to review, and then we're also going to do some scenarios for the strat. So what we've got right here on this slide is we're explaining an inside bar. So walk me through this, Jermaine.
Yep. So we believe everything only trades 3 ways. A scenario 1, which is an inside bar.
Mhm.
It didn't take out either side of the previous range. Now that could be a monthly, weekly, daily, or 60, or it could be on any time frame.
Mhm.
All right, so that's a scenario one. Scenario
Scenario
two,
2.
yep. Anything that takes out either side of the previous range. It could be the top or the bottom. You'll see these in trends. As you can see here, you got a bunch of 2s down and a bunch of 2s up.
All right, sounds good. Scenario 3, the outside bar.
The scenario 3, outside bar, this takes out both sides of the previous range. Okay, for me, this is the most important candle to understand, because on a smaller time frame, this is broadening formation, and we'll get to that in a second. This right here this shows us how to gauge magnitude. This shows us that this is our battleground. This is where we need to make decisions on this 3, and we'll get to that.
Okay, awesome. Now you were talking about the 3 universal truths, so lay that out for me.
All right, for you to understand what I'm talking about, so you can create winning positions, add to them, and protect your profits with tight stops, you need to learn 3 universal truths. Rob's already talked about them. Sarah's already talked about them. Dee Dee's already talked about them. So that's why we're reviewing this stuff, and I'm going to show you a little bit more, and then we're going to get into trade. The 3 universal truths are actionable signals, time frame continuity, and broadening formation. That's it. You learn those things, you can do this.
Okay, awesome. So let's start then with the actionable signals.
All right, actionable signals, a hammer. All right, there's a lot of stuff there on that screen, but you can read that later on. The reason why we look for a hammer is because they took this thing scenario 2 down. Here comes the sellers. Here's the people that are shorting this thing. And then the buyers stepped up and said, hey, we're going to take this joker. And it formed and closed as a hammer. That hammer goes in force as soon as the next bar opens as a scenario 2 up, right above that yellow line there. A lot of people confuse. They wait till like the next 2 closes. We don't look at closers. We hit stuff immediately. As soon as that 2 goes above that next bar, that next live bar opens up above that hammer, we're hitting this thing. Boom. That's our entry.
Okay, so just to review, so this yellow line here that's right at the top of this hammer candle, as soon as the next candle actually breaks through that, that is in fact your entry signal.
Yes.
Using this. Okay, and the hammer here is showing you a reversal in this case. Is that the issue, right? The stock is selling off. The hammer tells you that the reversal is in. Now there's a potential entry.
Yes, correct. And I'll show you how these actionable signals work into the Strat reversals.
All right.
I'm ready. Next slide.
Yeah, let's move to the next one. The Momo hammer.
Momo hammer. Price doesn't have momentum, okay? So it doesn't have a mass, so it can't coil, it can't bounce, there's no momentum. But we called it a momentum hammer. The nickname stuck, so we call it a Momo hammer. But essentially, it's just a hammer. And what I'm showing you here on this slide, what I'm showing you here is what it would look like in a live trade, okay? You can see where, I'm trying to get exactly where yours is. You see that Momo hammer, you got a 2-1-2 continuation, right? You don't have to be the first one in all the time, but right here, you see that hammer with the yellow line, or the arrows pointing to that hammer. That's going to show you your next entry you can get in, or if you're already in this thing, where you can add. Momo
okay, hammer. Interesting. So the Momo hammer can actually be used as an add signal too, in case you've already established a position.
Correct. Yep.
Awesome. And so I'm assuming here, and I'm just guessing, that what this is actually telling us is that the price here shot up on this. The very next candle, they tried to drive the price down, but the buyer stepped in. It just didn't hold. And that's what this candle is telling us. So our entry point then is on the next candle when it actually breaks the top of that Momo hammer, if you will.
Yep. People try to take profits on that thing because they don't know why the price is moving. We do. Right. They don't. Okay, so they're going to take the money. I'm going to take it while I can. And then the buyer said, oh, no, we got this again. And that's okay. So we can continue.
All right, let's move to the next one here, a shooter. Explain this one for us.
All right, shooter, also known as a shooting star. What this is we got the buyers in here. That very next candle at the top, they started taking profits on this thing. The sellers came in, they started taking profits. Bam, it creates a shooter. That shooter goes in force on the very next live bar down. That's when it goes in force. And that's when we hit it with puts or short it. But let's just say you don't know options. You're not good at options. You still need to learn that, okay? You're still going to use this because that's going to tell you when to get out. all right, that shooter's in force. Even just because you see that shooter doesn't mean get out. Okay, I see this shooter, I can hold, but that next bar, I got a 2-2 reversal to the downside, cut it, done. That's
Next, move on to the next. So now
all
we got
right.
a Momo shooter.
Momo shooter, same thing. This is just another example of what you would see in a live scenario. This happens all the time. Yep.
All right, so we did get a question here right now that I want to very, very quickly ask. If we're going to cover it later, that's fine. Esteban is asking, how do you define your stop loss level?
Oh yeah. So I don't want to get well, we're going to talk about that. We will.
Okay.
That's coming on. That's coming
on.
All
right, let's keep moving then. Now, next slide here is on inside bars.
All right, inside bars. This is an actionable signal. We do not trade anything that's forming an inside bar. Okay, we're going to talk about that later. But when that bar closes, that is an equilibrium that has formed. It's a consolidation that closed as an inside bar, and it needs to break. And once that thing breaks to the upside or the downside, that's when we hit it. Right there at that yellow line, right there. That's when we, bam, we're going to punch this thing in the face. We're taking this. So next slide.
Yep.
All right. Actionable signals is why the price moves. That's why the price moves. The hammers and the shooters, we know why they work. We know how they form, but we don't know exactly what caused it. So they're not universal truths. Inside bars, that's undeniable. Nobody can dispute that. So, but once they close, those become actionable signals. The inside bar is a universal truth.
Okay, awesome.
All right, so now let's work into the reversals.
I was going to say this is my favorite because the reversals seem to be a huge part of the strat. And actually, I didn't even realize this before I started learning about the strat. I would often trade reversals in my own personal trading. I would actually try to wait for some. Obviously, I don't want to buy something that's on a huge run. So when something would come in, I would try to wait for the price to reverse, buy the reversal, and then actually try to sell that for a profit. So to me, this is one of my favorite aspects of the strat. So I can't wait. So let's move on here to the 2-2 reversal that we just briefly talked about.
Awesome. Okay, so once that hammer goes in force right there at that line, essentially what you have is a scenario 2 down and a scenario 2 up, 2-2 reversal. Okay, and that's all. That's what you're seeing here. Scenario of reversal to the upside.
Okay, and this is a good entry. Is this a common one for you? Is this something that you look for on a regular basis?
For me, yes. Now this two down, I wish I could touch your screen. This 2 down here, that could be a solid bar. It doesn't have to be a hammer. Sure. I like seeing a hammer because it lets me know buyers are in this thing. Something's about to happen here. Now, if this does not go in force, that next bar does not go above that hammer, we don't touch it. Okay, we don't guess, we don't predict, we don't do any of that. If it's not happening right now, we're not doing it. That's why I like the hammer. It's easy to see. I can spot it.
They are easy to spot. That's true. All right, so another 2-2 reversal here. What are we looking at here?
2-2 reversal to the downside. Same thing, shooter. Let's say you got, let's not talk about options just yet. Let's say you bought something, it's working, and then it forms a shooter, and then that very next bar, right below that line, I know for a fact I need to cut this and keep my profits.
Okay, awesome. Clear as day, actually. All right, 2-1-2 reversal to the upside. So what are we looking at here?
We're going to be looking for those inside bars. These are easy to find because we're looking for the inside bar. This could be a monthly, weekly, daily, 60. That inside bar closed. We're waiting for that next, based on time frame continuity, we are waiting for that next 2 to break to the upside, and we hit it as soon as it does that.
Okay, awesome. Now we did get a question here that I want to ask. I know we're going to cover a little bit about this, but let's kind of set the stage for the audience here. Maruti was asking what time frame is recommended for a reversal. And then we had another question here from Patricia saying, what time frame are you using to trade on? So is it just one? Is it multiple? Are you using one to confirm another? How does that work in your trading plan?
All right, we're definitely going to get to that. Basically, these strat reversals work on any time frame. Any time frame. People use them for monthlies. People use them only on the dailies for swing trades. Weeklies, you want to find a stock that works. You want to work this stock all week. You can use them on the weekly. 60s, commonly we get in on the 60. We watch the 30s in the 60s, and we get in on the 60 commonly. Yes.
Gotcha. Okay. So the 60 is a common one. And then obviously you're also paying attention in that case to the daily, the weekly, and the monthly. Let me ask you, do you ever zoom in any further for any reason?
Once you get good at this, you'll start doing that naturally.
Gotcha.
We got anybody that goes below 30 minute time frame, we call them snipers. Okay. And they work, Sarah's a sniper.
Yep.
That's her name. It's all right. Sarah Strat Sniper. She works stuff on the 5 minute time frame. Bam. She's working really small stuff with a lot of shares. She's hitting things. Jim Bradley, that's on Twitter. He's always posting these crazy trades that only last 7 minutes long because he's doing the same thing on 1 minute charts. And it's amazing how much he's working this stuff. But those are the snipers. I'm not a sniper. I'm a tank. Okay. I roll in. I'm looking for the big move. I roll in. I'm hitting. Here's my position. I got my cannon. And then here comes the infantry because I got a small account. I can't take this on my own. We all go in force. Let's take the hill, whatever you want to say, and we do battle. And usually it's really good because we share this stuff for everyone, and we all win together, and it's amazing.
And so one of the other things I'm thinking about here with a small count in particular, you're probably under the pattern day trading rules. So you can't necessarily make multiple day trades every single day. So to me, when I'm looking at the time frame, I would actually kind of include that in my plan, right? So if I know that I literally can't make a whole bunch of day trades, maybe I want to try a longer time frame so I can actually swing this across multiple days and then not actually use a day trade in order to complete that trade. And if you do that, maybe you can adjust your position sizing in order to accommodate your risk profile. So that, to me, one of the big things here is that there's not necessarily a right answer on a time frame. It really has to do with what your trading plan is and what you're trying to accomplish. Would you agree with that?
Correct, 100%. The Strat, awesome. Once you learn this, the Strat will conform to your account size. It'll conform to what you like to do. I got to the point, I was on the pattern day trading thing, and I got to a point where I knew this thing looks good on the monthly, weekly, daily. I can hold this thing for a couple of days, and there's a trade that we're going to go through that I did that with, and I knew,
awesome.
And I knew, okay, I bought this thing on Monday. I can work this thing till Wednesday. I got this on Wednesday, I can work it till Friday, or I got this thing all week. I can do all these other trades, whether they work or not. I can get in, get out. Okay, that didn't work, but I still got this winner I'm working. Woo! You know what I mean? So I'm not worried about it so much. And then I learned from Mighty Soldiers that he's a good guy. He taught me I got the trade station. He taught me how to get a cash account, and I have no commissions, and I can get in and out no matter what. I don't have to worry about it. Check it out.
So there's another little tip. You're saying open up a cash account instead of a margin account so that you don't have to worry about that.
Correct. Oh yeah.
Mm-hmm. Awesome.
Yep. And I'll ramble about this all day long. I don't want to get through all this stuff.
All right, let's go through the 2-2 reversal to the downside.
All right, same thing right here. 2-2 reversal to the downside. That's what it's going to look like. Okay. If you're working puts on this thing, say you're good at options, you're working puts. Bam. Here we're going to go. Let's just say that shooter is green, and then we got this inside bar, and for some reason you think it's going to go up. As soon as that next two goes down, you know for a fact this is not a buy. So, you know, you can see this and go, okay, I don't want to be here. Shooter down on the 60. I'm not touching this.
And so that's kind of what I mean. Like, this is very helpful for removing your emotion. I think that this might go up. Nope, we've actually got a confirmation that this is going down. You can kind of remove that from the trading and just execute the strategy that you set out to. So yep. Really awesome. So next here, we've got a 3-1-2 reversal. Walk us through it.
3-1-2 reversal, same thing. You're just looking for that inside bar that's closed. Based on time frame continuity, this thing could break to the upside or the downside. Now that 3 right there, I'm pointing at it. You can't see me, but I'm pointing at it. There's that 3. That's our battleground, okay? They bought it up. They sold it down. There's a battle going on here. And then that inside bar consolidates because everybody's trying to figure out what this thing costs. That next bar breaks to the upside. We hit it. And that's our reversal. As you can see, no lower lows. That could be a monthly, weekly, daily. That could be a quarterly signal right there. That could be a yearly. We'll get to that stuff.
And then let your winners run in that case.
That's right. And this will show you how to keep them running. This is reversal to the downside. As you can see, the price was going up. This thing's awesome. And then okay, this is kind of wonky. And then the inside bar, and then you got that outside bar. Bam. All right. Now, if you're, depending on how much profit you got, you might want, am I going to hold this? Is it going to return back to the upside? I see that inside bar, and then that next two goes down and confirms I got to get out of this. I'm keeping my profits. I'm not going to hold through another crazy thing. So that's a great thing there. Or puts and options. You want to short this thing? Bam! I know when to get it. I'm working this thing on both sides.
Awesome.
Okay, keep going.
The no-no zone. Tell us about the no-no zone.
The no-no zone. We don't call it that. I call it that. The no-no zone. Do not trade anything forming an inside bar. We've all seen this in October, because October, everything has been inside bar on the SPY. Dow, diamonds, Qs, everything's been inside bar. And then look at all your monthly charts. Most of them have been inside bar. It's been tough. So what that is the price is just moving all over the place. Now, the bigger the time frame, you can work stuff on a bigger time frame, like the monthly, because we can still go after the weeklies, the dailies, the 60s, things moving around. But if you have a weekly, a daily, a 60, a 5-minute, a 30-minute inside bar, forming an inside bar and it hasn't closed yet, don't touch it. And I got an example why you don't want to do that here very soon.
All right.
Let's
do that. So next here, we've got the danger of trading something that is still forming an inside bar. So show us what the danger is here.
All right, left side right there. You see the weekly forming inside bar right there. It ain't closed yet. It's still forming. Now let's look at the 60 minutes. All right. Okay, it's going down. Okay, I'm good. The inside bar is inside bar. Shooter and force. I'm getting a put right here. Bam, it goes down. All right. Oh, I get stopped out on it. It goes up. Now it goes way up. Now, okay, that put still works. Now I got 2-2 reversal down, but that's actually a compound outside bar. Okay, I'm gonna get in. Now this is a buy. I got it. 2-1-2 up. I got a buy. This is good. And then it goes right back down again. You're like, what is happening? You don't know what's going on. You have a small account. You don't have enough to just jump in and out and do all this craziness.
Exactly.
If this is happening to you, go to a higher time frame. Check to see if the daily's inside. Check to see if the weekly's inside. That's very important. Most traders don't know that. So you're ahead of a lot of people just by learning that one thing.
And so we've got several questions here regarding the different time frames. Like, what is the ultimate setup? Would this be an A+ or a regular setup? Do you only use 60s for your actionable signals? And it seems to me that one of the things that you've kind of got to figure out is this is what you want to avoid, right? You want to avoid getting chopped up, in particular if you don't have the ability to execute a bunch of trades in one particular day. And if that's the case, if that's what you're seeing, the first thing that you should do is kind of change your time frame, drag it out a little bit longer so you're not actually forced to go through this whole chop zone. Is that fair?
I would say that's fair. I would say definitely if it's happening to you on any time frame, go look at the higher time frame and see if that's forming an inside bar. As soon as you see that inside bar, you're like, okay, all right, I need to not work this stock. I need to go do something else, cut the grass, go do something else, because this stock right here is not working. Or we have days where the stratters don't do anything. We just get on Twitter and everybody's making jokes and memes and all this stuff because the entire strat army is doing nothing. We're not touching anything. Everything's inside bar. It happens. So that's a danger of moving inside bar.
Okay, awesome. And just as a reminder, I know I'm seeing several more questions here. Yes, this webinar will be recorded and you'll be able to play it back to your heart's content at your own pace. So,
yep,
all right, moving along here. The danger of trading something that's still forming an inside bar. Looks like we had another. Did you want to read this slide? Should I keep moving?
Just keep moving. It's just more information for you when you look at it later on. Okay.
All right, here we go.
Bam. Mother bar. We call this the mother bar. And then here's all the tiny little babies coming after it. Okay. The mother bar. If you see this is another version of the no zone because this thing is getting chopped up. What this really is price discovery starting over again. We'll get into that. But you see anything like this, it means stay away until it gets out of this mother bar. We call this mother bar problems. And just in case you think this is a rare thing and you'll never see it, if you can hit that next slide there, Ryan. This is yesterday overstock. Oh my gosh. Look at that thing. That's going to be
a monster
bar big time. That's on the 60. And it beat its earnings. Yeah, it's going to be great. And then what's it do all day long? Dies. So and And I saw this and I was like, oh no, Rob's gonna get mad at me because I didn't do anything on this. Rob would say, how can you miss this? Get in. But I didn't. I was working other things. You know, I'm busy at work. I got kids. I got a cat. I got all this stuff, so I didn't see this. But again, you see this on any time frame. This is a motherboard. Perfect. This is a perfect example. We see this all the time. This is not a rare thing. So this was just a great example of how you see this all the time.
Awesome. And then so here we go. This is where we avoid the inside bar setup. So talk to us a little bit about this.
All right, so we got our broadening formation. We'll get into that. We got our broadening formation, and you got a higher highs and lower lows. You can see that very top green right there, and the very top of that, the bottom red, right there. Yep. That's our outside bar. Okay, everything before that is inside that range.
Yep.
We'll take a reversal. We will take any reversals that's going to get out of that. Because then everybody says, okay, this thing's going to the downside. We'll also take a break to the upside. We'll get into broadening formations in a second. But if you see something's about to set up that's going to take this out of this range here, we'll do that. We can do that.
All right, so on to time frame continuity. We did have several questions about this. Benjamin was asking, will time frame continuity be explained a little more? It's my biggest issue, ensuring time frame continuity is in my favor. So here we go, Benjamin. This is for you. So let's go ahead and move to the example here. Jermaine, take it away.
Awesome. Okay, now we're starting to get into the whole strat, nothing but the strat. Time frame continuity, second universal truth. All right, this is how we trade. We have all our charts up at the same time. The monthly, bottom, yep, monthly. The next one, yep, that's the weekly.
Daily.
On the left, daily, and the one below, that's 60. This is how you set up your charts. And I'll show you how to do that, but this is exactly what we look at. We don't need indicators. You don't need RSI. You don't need SMAs. You don't need Fibonacci's. You don't need volume. This is how I trade. This is what my charts look like. I don't need any of that stuff. I don't want anything covering up what I know to be true. What do I know to be true? That there's buyers in here on the monthly, there's buyers on the weekly, there's buyers on the daily, and anytime that 60 is green, I'm hitting it because I'm with the buyers. Remember, I'm a tank. I only got so many rounds in my tank, missiles, and I'm gonna be where the buyers are. And I'm gonna hit every time. So you got this two scenario up, then you got that inside bar. That's actually a 3 if you zoom it in, but I would still treat it the same as a 2-1-2 reversal. I would, as soon as it breaks above that inside bar, I can hit it. Bam! You don't have to be the first one in. And then I'd work it all the way up until I saw that shooter form, and then I would know as soon as that shooter goes in force, I need to take my profits.
And
Done.
so that the shooter going in force is when that next candle starts to create, starts to build, and it breaks that low, you're out at that point.
Done. I don't wait. I don't, let's see if it comes back. We don't play that game. I'm done. If you work this from the beginning, or you already had this and you saw that shooter, awesome trade. But if you got in on that second entry, you only have so many, was that 10, but it's still a $10 move. That's still pretty good.
Yeah, absolutely. Especially if you're doing options. So to me, this is actually one of the real good slides, because this kind of brings a lot of the things that we've been talking about together. You were getting questions about time frame continuity. You were explaining time frame continuity. It's very, very easy to see here. You start with the biggest time frame. In this case, it's the monthly. It's all green. You then zoom in, if you will, to the weekly. That candle's green. Zoom into the daily. That candle's green. So now you've established that buyers are in control of the stock. And so as you zoom in more to actually take the trade, you move to the hourly. Mind you, we're not on a 5-minute or a 1-minute here. We're still working off of an hourly. You see your entry trigger here on the 2-1-2. And then as soon as this reverses at the top, when you're already in the position, now you're waiting. You're saying to myself, okay, if this confirms, I think you called it in force. If this goes in force, I'm out and I'm taking the gains. And if there's small gains, you know what? That's better than a loss. That's better than any loss. So take it, move on. You're going to have another opportunity. The market will be open tomorrow unless it's a Friday.
That's right. That's exactly right. And that's exactly right. And I don't need an SMA to tell me this thing's dropping. I know when to get out. But the key to time frame continuity is having your charts up like this. Okay, got to have them all up. Next slide, if you can, please.
Yep. Yes, sir.
Some of this. All right, here we have a time frame continuity, full time frame continuity to the downside. All right, DraftKings. People were asking us, is DraftKings a buy? Now, I haven't looked at the market today, and I didn't look at it yesterday, but I can tell you right now, on Monday, the month was red, the week was red, the daily was red, and every 60 on that day, red. Is this a buy? Nah.
No.
No.
The trend is your friend. Don't fight it. Don't
Exactly.
fight it.
And people want a bottom pick, and that's good. And there's this thing that's been going on all the year. Stocks only go up. You can see right here, stocks don't always go up.
Yeah, and be very, very careful about that. I know there's a lot of joking on Twitter right now. We'll just call this a PSA for our webinar right now. A lot of joking about stonks and stocks only go up and this, that, and the other thing. They don't always go up. And in fact, it's that going up and down that actually causes traders to be shaken from their position. And if you're new and you don't know what to expect, that phenomenon can be exaggerated. So that's one of the reasons why I really like this, because this is, you're giving yourself other resources to confirm what you're seeing. So you're not guessing. And because you're processing so much information, you're not really giving yourself time to think about all these different emotions. Oh, I don't want to lose money. I was in this, but any of that stuff. You're getting actionable signals in and out. That's really great.
Yep. All right. So real quick, time frame continuity. There's 4 things I want you to know: control, confirm, conflict, change. If you get this down, you got time frame continuity. You will not need indicators. Okay. So let's go to control. All right. Control. I don't have one. Go to confirm. I'm sorry. Confirm's fine. We'll start there.
My bad. I clicked ahead too fast there.
That's okay. Go to, confirm good. Okay. So we'll start with saying that the 60 is always in control. The 60 tells you what's happening right now. Bottom left. That's going to tell you what's happening right now. That's why I don't need indicators, because right now they're buying this thing. And 60 in the daily, if they're together, that's what's happening today. Now, are the buyers in this thing or the sellers in this thing? That's what's in control. You want to trade in control. Now, you understand this. This is the whole key right here. We are looking for buyers on the monthly, the highest time frame. We are looking for actionable signals that confirm on the weekly that will reconfirm the monthly. And then during the week, we're looking for daily signals that will reconfirm the weekly in the monthly. Then every 60, I'm hitting this thing. Why? Because it's reconfirming what I'm seeing on the daily, what I'm seeing on the weekly, what I'm seeing on the monthly, that there's buyers in this thing. We call this full time frame continuity.
Okay, awesome. So again, I think the key here to remember is that you're starting with the bigger time frames and then you're moving in as they confirm, right? So the monthly's green. So now it's time to move into the weekly. The weekly's green, move into the daily. The daily's green. Okay, now we're looking for actionable signals on the hourly. So you're able to go through an entire process there before you're actually taking these trades on.
Correct. All right, next thing is conflict. All right, here's some conflict. All right, so our monthly's green. Our weekly's green, daily's red. Now I'm going to skip a little bit. Let's go straight down to, let's go to the 60. Let's look at that. Let's say we got in at the bottom of that green there. All that good stuff. A little bit lower.
Right here?
Nah, give me a little bit lower. Right there. Let's say we got in there because we're good at, we got it when it was green on the week, on the month, green on the day. We started down here.
And so real quick, just to go with that, this is a 2-1-2 reversal.
Exactly.
So there you go. So that's why you're picking that as your entry.
Yeah, exactly. And there's no labels on the candles. You can see this. That's awesome. I'm glad you're getting it. So you started going up. And then let's say right there, that 2-1-2 reversal to the downside at the top there. No, to the right. Yep, right there.
2-1-2.
Yep, they start taking profits, and then we see it, and we don't freak out, okay? But then that next scenario too forms a shooter, and then that goes and force 2-1-2 continuation to the downside, and then that starts pulling down the daily. The daily, it's a little ugly, but I would still call that a shooter, all right? And now, if that shooter goes and force on the daily, it's going to turn the weekly red, and then if that keeps going, that's what's going to turn the monthly red, and that's what happened to DraftKings. So this is conflict.
Okay, awesome.
Yep. Next.
And really quickly, one more thing I want to point out here, and correct me if I'm wrong here. It's not as if you know, if you understand the all the different candles and then the reversals, it's not as if you're guaranteeing that these trades are going to work.
Right.
There's a possibility that it doesn't work, but because you know what you're looking at, you know why this doesn't work, and you know to get out quickly. And that's a huge thing when you're talking about keeping your losses small. You had mentioned it earlier, Jermaine, in the presentation. You know, we're hoping that this goes, that this reverses, or we're hoping that this puts us into profit. Hopium is not a strategy, right? So we want to stay away from that. We want to be able to react to the things that we see. And just because you're stopping out of something with either a little bit of profit or maybe just a little bit of loss or even break even, that's not a bad thing. You stopped yourself from taking a loss that was really going to put you behind the 8 ball. So that's not, again, protecting your capital should always be one of the things that you're focusing on. Not a bad thing if you're ever in that position.
That's right. That's right. Next slide on conflict. We already went through it, and you said it all. So this just shows more conflict, and this shows how the daily started going down, and now we got a 2-2 continuation on the weekly. Notice that hammer on the weekly did not go in for us.
Right.
Went 2 scenarios down. Now if that keeps going, that's going to turn to monthly red. It's conflict, and I don't need to wait for my SMA 13 to go down below the 13 to tell me, the 30 to tell me that stuff. Okay. I know exactly what's happening. Next slide here.
Change.
So now all that stuff happening. Now the monthly's red, even though there's not a reversal on the DraftKings in the monthly, it's still red. We know there's sellers here. That's it.
And we can see that we can confirm that with the weekly and then also the daily.
Yep. There's no guessing here. They're taking this. The sellers are taking this. So broadening formation is the third universal truth. And then hopefully we might have to skip some stuff and go straight to the trade walkthrough. But that's broadening formations. This is going to be simple and quick. Broadening formations. All we're showing is higher highs and lower lows, and we draw it backwards from those recent higher highs and lower lows. This is the SPY on the monthly, and you can see that shooter right there. To the left, the first red shooter
right here.
Right there. That's January. Okay, we expected it because everybody made money all year. And then January comes in, they're going to take profits. So we figured that. Okay, good. And then February opened as a 2 up, and then it failed and it started. And then we got news about coronavirus.
Yep.
Not any jokes about that, and then everybody freaked out. Outside bar. We knew what to look for. Stop it. Stop all operations. Hold on. Let's see what me being a small account guy. Stop. So everybody freaked out in March, outside bar, and then February, and then March, there's that scenario 2 down. It was really hard to hold anything longer than the VIX is all the way up. It was hard to hold anything longer than an hour or 2 hours because they were taking the profit immediately. They were dumping it immediately. And then here comes that inside bar. That's April. Okay. And then bam, what's that? That's May. That's when, pandemonium in the streets, coronavirus, all this crazy stuff going on. QQQ going to the highs. All the tech stocks going to the highs. Everybody's going nuts but then on the monthly, you see here this broadening formation, 2, 1, 2 reversal to the upside. And we already had this broadening formation drawn. And what did it do? Every month it went all the way to the top, took out that very top of that broadening formation, kept going a little bit. Now October is kind of a little sketchy there. But we're not going to make any assumptions, but we call that triangle day out. But that's why we use our broadening formations, to see the broader outside bar, the larger outside bar.
Awesome.
Okay. Yep. Okay. So I'm going to go through this pretty quick so we can get to the trade walkthrough. Here's an example of how to draw those higher highs, lower lows backwards. Okay. You don't have to draw the lines. It helps me. I like to draw the lines. For example, here's XOM. Is this a buy? This is a broadening formation on the monthly. No,
that's not a buy.
No, this is not even close to becoming a reversal up. Now, you can work stuff from the bottom of the broadening formation up. I love those, but this ain't even close to doing none of that. All right,
it looks like we're still in no-no land here. If we were looking at the broadening formation, we're just in no-no land.
Yeah,
and again, small account, you don't want to get chopped up in this. You want to wait for a confirmation.
Correct. What is going on with my computer? Hold on a second here. It seems not to be getting any power.
That's bad.
Well, I don't know. Okay, whatever. We're gonna go with it. Hopefully it doesn't die in the next 15 minutes. All right, here we go. So what do we stay away from? We stay away from anything chopping around in that mother bar, in that greater outside bar. So this is BA. This is Boeing. Boeing on the weekly. Look at that broadening formation. I don't care how much news comes out about recertifying that plane. I don't care. Dow Jones could have took it out of the Dow and they kept it. I don't care what you tweet out. This is 20 weeks stuck in that mother bar. Look at that.
Yep.
I don't need Fibonacci to tell me where this thing's going. It's doing nothing. It's stuck. And it's not coiling. It's stuck.
Yep.
Okay. So let's take this broadening formation. This next slide, real quick here. Next slide. I did not move the lines. All I did was compress it down to a monthly. That's 4 months stuck in that one bar. You can look that up for yourself. Yep. Next slide. All right, here's our broadening. So let's move it out. Let's draw the broadening formation on the monthly. What's going on here? See where we're at way down here at the bottom? Does that look like a buy? Not to me.
Nope, me either.
Nope. All right, next one. All I did, again, I didn't touch the lines. I did not move them. All I did was compress it down to a year. What do we see immediately? A shooter in force on the yearly. Look at that. Oh my gosh. Are you kidding? I'm going to buy the dip on this.
No way.
Oh, yeah.
You want to talk about catching a falling knife, man. You're catching several on that one.
That's not a knife. That's a sword.
All right. So let's do it then. Let's actually go into the trade itself.
Let's do it. All right. Let's do it. How do we use all this? All right. Let's create a watch list. And we're going to do this so we can get the trade walkthrough. I'm going to the monthly chart. No matter what stocks you use or how you find your stocks, you look at the monthly first. I'm looking for anything that's 2 up on the month. That lets me know there's buyers in here. Scenario 2 up on the month. And
I think we lost him because his laptop ran out of battery. So what we're going to do is I'm actually going to wait for him to rejoin. Hopefully he'll be able to do that. I'm going to do my best to try and go through this as well. I know we had a lot of questions here about some of, like, how do you scan? How do you make a watch list? How do you do all of that? Oh, look, that didn't take long. Did your laptop run out of battery, bro?
Yeah. Plan B. Okay. And just like that, I cut it. Done.
And real quick, I just want to point out the Army guys always got a plan B. Look at that. Unreal. Way to go.
So true. Okay. Here we go. Plan B. Okay. Here's EXAS. 2 up on the month. I'm putting that on my watch list. Next slide. All right. Peloton. Oh, no, this is Ford. 2 up on the month. Looking good. I'm going to put that on my watch list. Hey, Grandpa, wake up. Ford's working. Okay. The watch list on Peloton. Oh my gosh, how did we not see this? The people looking at the daily charts can't see this. They're looking for some head and shoulders thing. No, we look at the monthly. Now, you see that right there, that hammer and force at the bottom right there? That's a 2-2 reversal to the upside. You bought that thing at 30 bucks and just held it. That's how you create portfolios. Oh my God.
Yes, sir.
That's right. Okay, let's keep going.
Love it.
So now what we're doing is, SSTK, 2 up on the month. And I'm going to put that on my watch list as well. All right. Next slide. Now, what we're doing is looking for actionable signals on the weekly to reconfirm what we're seeing on the monthly. All right. Now, here we go. We got SSTK. Is this an actionable signal? No. It looked, honestly, this is probably going to open up inside bar for the next week. Next slide. No. I think we missed a couple because I wanted to go through the actionable signals on the weekly.
Yeah, I think I skipped over a few of them there. I apologize about that. So here's the creating a watch list. Here was supposed to be the next slide.
Okay, weekly. Okay, EXAS. Is this an actionable signal? It's not really a shooter. It's not really anything. It's that next week's going to open up inside bar. So no. Next slide. Ford. That's an inside bar. I'm going to wait till that thing closes. Once it closes, if that thing goes in force to the upside because the monthly's already a 2 up, I know there's buyers here. If that thing goes above 822, I'm hitting this thing. We got people that only trade inside bars on the weekly. We got people that do that all the time, and you can work that all week and make bank. Okay, next slide.
Awesome.
Peloton. All right, is this an actionable signal? No, but I do know about Strat reversals, and though that's not a shooter or a hammer, that if that 2 scenario breaks as a 2 scenario up, I'm going to hit this thing right above that 2.
No, so let me ask you real quick, just looking at this chart, it reminds me, do you ever, if something that you say, you know, this could become a 2-2 reversal, do you ever put that on your watch list for the purpose of watching it? Or better yet, do you ever put price alerts on to kind of remind you in case, hey, I forgot about this particular stock or what have you?
Yes. Yes. I either put alerts on. I learned about how to use stock market buy orders.
Mhm.
So now instead of setting alerts, I just set it. You know, if I got the capital and I want to work this thing, but I'm at work, I got kids, I got all this stuff, I don't have time to stare at the charts, or like you said, I forget it. I'll set it a buy for just a couple shares on, for example, Peloton, if it goes up, and I'll get an alert that says TradeStation bought these shares for you, and I'm like, awesome, we're in. And I don't have to look at the phone at all. I mean, now my trading platform's working for me, and it's working the Strat.
Yep.
And then, you know, it didn't know it. I know what I'm, you know what I mean? It's fun. All right.
All right. So this is the one that we actually covered, SSTK, not an
Yep.
actionable signal.
Nope.
Entries
All right.
and stops.
All right. This is the most important stuff. This is what everybody wants to know. All right. First of all, we don't take losers and we don't hold losers. I got a small account. I ain't got time to mess around. All right, if I'm going to get in, here's my entry right above the hammer. That's my stop every time. I'm not even kidding. That's my stop. And I stop it right there because we are now trading something that gives me we are now trading something that gives me the reason to believe that this price is going to move, and it's going to move immediately. If it doesn't, I get out immediately. I don't wait to see what's going on. I don't wait to see if, you know, maybe it'll keep going. You know, I don't wait. I get out. Now, if it sets back up, and that thing goes 2 back up, then I'll get back in. I'll try it again.
And that's a really good point. I just want to stop you there. That's a really good point. You got a tight stop here. So if this goes against you, you're not turning this into a big loss. Awesome preservation of capital. And then you're also saying to yourself, well, if this doesn't work and then something changes in the future, I can always rebuy it then and enter then. So really, really key point that a lot of people forget about. I'm guilty of this. I've forgotten about. I had a position. I really, really wanted it to work. It starts going against me. I stop out. Don't forget about it. It's possible that actually turns around in the future. Just know what you're looking for and remove your emotions from it.
Exactly. So if this was a monthly, weekly 60, you can work that. If this was like a five minute, you know what I mean? Anyway, but next slide. I'm sorry. Okay. Now, if I'm going to work puts or short something, this is my entry. This is my stop. I'm not going to wait until I don't set my stop above that shooter. Same thing with the hammer. I don't set my stop way below, because you're just waiting for a bigger loss. If it's not working, I get out immediately. I'm not going to sit here and hold this loser and see if it goes. Nah,
Hopium is not a strategy, my friend. Hopium is not a strategy.
I like that, hopium. That sounds like a bad. Say no to drugs. Say no to hopium.
Yes. All right. So here's the trade walkthrough we've been looking at. Yeah. Give it to us.
All right. Hopefully we can go through all this. Okay. So this is a real trade in June. But I got all the charts for you here. And TradeStation has, TradingView has a really cool feature where you can play back candles, and that really helps you. See the strat, and you can speak the strat out loud and look at these candles and play them out one at a time. And I think it's actually more effective than paper trading. But
interesting.
Yeah, so that's a feature I use that here. If you're wondering why there's no more candles here, and how'd you get screenshots? That's what I did. I played it backwards, or replayed it. So here's June. Why am I looking at INO? I'm looking at INO because there's buyers in here. Okay, now there's no crazy, real nice, smooth, actionable signals here because it was a crazy time. But there's buyers here. I want to see if this thing goes 2 up, and it did on the month, and that's where I got in right there at 1365. I knew if it went above that, I can work this. Very small. Very. Now, what actually happened was a 2-2 reversal on the weekly, right there. And so I got so there was a 3 down, and I knew once that 2-2 reversal went in force, I knew my next battleground, my battleground was that outside bar. And my objective is to get above that 3. That's what I want. It's got to stay out of this 3. That's outside bar, or it's going to get stuck in there, right? So once it did that, I'm working it. It's going great. That very next week goes scenario 2 up and just takes out that outside bar. Boom. I know I have a winner. I don't have to wait. I don't have to hope. This thing is good.
Let me ask you a question. Would you ever consider adding in this position?
Yes. So yes, I think I missed that on my slide there. We get in on our very first entry is a very small entry. Okay. I'm talking, if you're working common, if you could buy 10, buy 5. If you could buy 5, get 2. And I start with just a couple shares. So if I get stopped out, that's a very small loss. Okay. Well, did I tell you about Monday? I'm not sure if I did, but I got stopped out 4 times on Monday trying to work School of Rock, SRRK. We got all these nicknames. SRRK. I tried to work a couple other stocks. I got stopped out a few times. I learned from Jim Bradley to have a stop loss limit for the day. If you get to this limit, be done for the day. Okay. Nothing's working. Okay. So my losses for Monday were $11.36 because I kept my shares small. I kept my position very small in this thing. If you're working options, you have to have a very small amount you get out on, because options will take you out so fast.
Yes,
and all your capital premium is gone. If you don't know, I mean, I'm going to wait and wiggle. I got, it doesn't matter if I lose $150. If you're losing $150 on a trade, that's bad. Okay.
Yeah. I don't want to lose any.
Exactly. So small account guy. Okay. All right. Here we go. Next slide. All right. So actually what happened was, here's the 60. I actually got in at 1385 on a 2-2 reversal to the upside. Now, like that was that's my actual stop. Was it 1375? I think that's
1372. So why did you pick that level?
why did I pick that price?
Yeah.
Oh no, that's I didn't really pick it like this. I'm gonna pick 1375. That wasn't a thought. My thought was I need to get in on this thing. It broke above that 2. This is a 2-2 reversal to the upside. I need to get in, and that's what I got. I got 1385. There was no strategy on that. Does that make sense?
Yep.
So I'm getting in 1385. Now, if it was a lot higher, you know what I mean? You don't want to get something way at the top of this candle. You know what I mean? But that's where I can get in. Boom. And it was just a couple shares. And you can see there on that day, there were no lower lows. No lower lows on it did not stop me out at all.
So, okay. So we got a question here that's saying, why is there a stop at 1372?
If you go back to, if that was a hammer, if you go back to where we put it, you don't have to. I'm talking about you, not you, Ryan. But if you go back later on and see where I put my stops, it's a tight stop. It's a very tight stop. If this thing is going to work, it's going to work. If it's not, it's not.
So basically you didn't choose this stop because one of the previous candles. You chose your entry because you're breaking the top of the 2, and you're saying to yourself, okay, I'm going to make sure that my stop is tight so that if this actually doesn't work, I'm not going to turn my loss into a big loss.
Exactly. And
gotcha.
Exactly. And tight stops. If it's going to work, it's going to work. If it's not, it's not. And so that's what. And again, I'm using very small position size. So
gotcha.
If I get out, it's a couple dollars, it's a couple pennies. I don't care about it. It's 75 cents. I move on. I still got capital to work something else.
Absolutely. So great question. Amit Kumar, great question there. All right. So moving on here to the next slide.
Yep. Next slide. What happened? Here's the daily chart. I zoomed out, tried to shorten this out for you so we don't have to look at every 60, but that's where I got in. That's the daily charts. These are real charts. Go back and look at them in June. That's where I got in. Now that next day goes scenario 2 up. So like I said, I'm back at work. Everything's fine. I don't need to get out of this. I'm not getting stopped out. Now look at Monday, June 22. Still good. I don't have to get out of this. You want to talk about day trading? That's how you day trade. A swing trade. I'm sorry, swing trade. Look at the weekly on Monday, 22nd or June. I know, still good. I added to my position on that next candle. That arrow shows you where I got in at. That very next week, this thing explodes all the way up to, what was it, about $23?
Just under 23. Yep.
And I added to my, bam, hit it. Now, when it was in that little green bar back there, right there on that weekly, we're all in the chat room. I say, hey, Rob, this, I know. He's like, okay, yeah, I know. Get, he pulls it up and you ask him about your trades. Tell him what you're doing. Tell him where you got in at. He was like, okay, yeah, good, good job. But that next week, he was saying, I know, get. And everybody got in there with me. Remember, I'm a tank. I don't have a lot of rounds, but when that green bar exploded like that, I got everybody with me. Now now we're all taking this stock to the highs.
Now, so we got another question here from Rudy. Is this now a mother bar?
Hold on, we're gonna get there. We're gonna get there.
Ahead.
We're still on the winning side. Okay, so this is not scaring us. We're still on the winning side. Now, this is a daily chart. Now, I would love to tell you that I worked this thing all the way up to the highs, and I didn't. This is where I got stopped out at, and I'm gonna show you why I took my profits here. But this is where I got out, and I got out, but I should have got back in, and I'll tell you why. And there's a buddy I talk to all the time on Twitter. His name's Chuck. If you ever see my tweet that say, here comes Chuck back at it again with the strat scan. He does our strat scans for us. That's Chuck. And we talk to each other all the time. Like, we should have kept Ino. But let's show you why I got out of this thing on the next slide.
Now, are these mental stops or hard stops?
This one's gonna end up being a mental stop because the platform I was in, I couldn't put hard stops in. I couldn't program them in. That's what I do on TradeStation. I put a buy in and I put a stop in immediately.
Gotcha.
And it's out automatically. The platform I was in before, I had to just stare at the charts all day long. So having a platform that you can program stops in there makes it so much easier. Okay, the next slide, walk through on the back one. I'll show you why I got out. Okay, here's why I got out. The 24th opens up. I held through this outside bar. I held through it. And I'll show you on the next, these are all the 60s for the 24th. Okay. And go down to the next slide. Right. Yep. Not next slide. This is where this is what happened on the opening. They tried to take it. The sellers tried to take it and the buyers took it right back. Now I held on to my position because that next bar went scenario 2 up. So then I thought, okay, I'm fine. Because remember, we have all our charts up at once. I already had if I know the watch list is from my 2 up on the month, what I'll do is I will take those quadrants and I'll have weekly as my highest time frame or the largest time frame. And I'll have weekly, daily, 60, and then whatever time frame I want down here. The smaller time frame I can toggle and I can see what's happening on the smaller time frames. So I immediately went down to the smaller time frame on the 5-minute and I saw, okay, they're taking this thing back to the upside. And once that bell rings, anything could happen. But right here, good. Now, looking at this chart, just real quick, this is where Sarah or any other strat sniper is going to get in here and work this joker. See this, they might not get in on that very first 3 to the upside. They might wait for this thing to come down and then right there, that inside bar break to the upside. They would work that all day long. I mean, that's beautiful. That's just a little side point there.
Yeah, no, great.
Yeah. But, okay, so I held through that. What happened on the 60? Let's go back to the 60. That arrow still pointing to the outside bar that I held through.
Mm-hmm.
It was 2 up. I'm like, okay, this is still good. And then that next hour was a little doji. Then it went inside bar, and then a little tiny 2 down, and then inside bar. And then Rob will tell you, usually they'll bore you. They will bore you to death before they take your money, right? So and once I saw this thing break as a 3, came up a little bit and went down. It's a 3, scenario 3. I've already held through another 3. Excuse me, I already held through a 3 earlier in the day. I can't do it again. And
so
too much
out at this point.
That's right, and that's when I cut it at 24.09. I've already added to my position. I'm happy. Now you see that 2 up, that scenario 2 up, that wasn't there, so I had nothing to look at.
Right.
Yeah. Yep. So back, you can look at any chart, and everyone's a genius, later on. But I didn't look at, I wasn't looking at that. I didn't have that to see. So I'm like, nope, I'm taking my profits. I'm not fooling with this thing. If this thing reverses to the downside, then I didn't make no money, and this was all a waste of time. So I didn't do that. I took it. Now let's look at next slide. Let's look what happened the next day on the 25th. It did get all the way up to $32, just about to $32. But there's no actionable signals here, so I didn't get in.
Gotcha.
On the very next day, they did take it up to 34, but again, there was no definite actionable signals for me, so I stayed out of it. To me, that's a chop shop, and I look at this thing, and I made a good decision.
Yeah, you're sticking to your plan. That sounds like a good decision to me.
Yep. Now let's a larger view of, now here comes the guy who's asking about does this thing a mother bar. Now you're going to see it, because on a larger time frame, this is what happened on the monthly. That's where I got in at 1385. I worked it all the way up into about 2409, and then I took my profits. Now it did go up and come back down, but what happened to the monthly? That next monthly opened up as an inside bar. Okay, now what if I was the guy who bought this at 33 or 32, and then that very next bar, that very next month opens up as at $24? Ouch, that hurts.
Yeah.
You know? And but let's just say you did do that. The reason why the Strat is so awesome, because you see that and you go, oh, this is already a loser. I need to cut this. You don't think to yourself, maybe that thing will go 2 up. Let's see. No. That thing's directly in the middle of that bar. This thing's going to have motherboard problems. You look at the very next slide, bam, look at that thing. That's what it is right now. You can look at INO on the monthly right now. That's what it looks like. Woo! That thing's got motherboard problems. Does that look like a buy to you?
No, sir.
Then that's why I like to draw the broadening formations. I like to see what's really happening with this stock. And I know we're running over. Thanks for letting me keep talking. If we can go to the very next slide. In the Army, we say, when someone says in summary, everybody else goes in summary. It's like everybody
In summary.
There you go. I love it. All right. We use 3 universal truths to create winning positions. We add to them and we defend them with tight stops. Okay. We get in. Our very first initial entry is small. No matter what account size you have, it's going to be small.
Mm-hmm.
So we can add to our winners, but we keep them small so we can keep our losses small. All right. And then we use progressive stops. I forgot to actually really say that term, but we keep moving the stops up. All right. If you can program them in, put them in. That
also
way,
known as a trailing stop, which will normally follow the action up or down. So
correct. And this will ensure that we don't give back any of our profits. And then have a loss limit for the day. No matter what dollar amount it is. Mine is, I'm not kidding, mine's about $10. If I get over $10 losses, all right, it's chop shop today, or I need to go do something else.
Just move on to something else.
Or you don't need to do it. You don't need to do it every day. You know what I mean? And when you get to your limit, go do something else. And that will keep your losses very small, and that will ensure you do not give your profits back from the prior day, the prior weeks, the prior months. You know what I mean? Because if you make a mistake and you lose $150 on a small account, you just set yourself back months.
Yep.
I don't like that.
I don't either. All right. So okay. So that was super awesome. So we are over here. I definitely want to wrap this up. Thank you very much for being patient with us. I'm sorry for going over. We did have a lot of stuff to cover. I know I had a whole bunch of questions, man. You bring the heat, Jermaine. There was a lot of interaction here. I really, really appreciate it. I'm sorry for the questions I was unable to get to. Jermaine, I know you make yourself available on Twitter. So if people have follow-up questions, maybe they can tweet at you.
Oh yes, please. And then anybody on the Strat hashtag the Strat on Twitter. And then also there's the Strat Facebook page. And then also check out Rob Smith on Ticker Talker app. All these videos are free, 100% free, not even kidding. And if you don't have the money to get in on the live trading, that's fine. He's made all these videos for free. But I guarantee once you start making wins on those videos, you'll want to get on the live chat room and let him teach you. It's awesome. I'm telling you, it's amazing.
Good stuff. So thanks very much. And once again, Jermaine, thanks very much for your service. I really appreciate that. And for everyone that was watching today, remember, there will be a replay of this in its entirety that you'll be able to watch. It won't be available till later this evening. I'm going to go ahead and share that with Jermaine. You can always ask me or him. We'll be able to distribute that for you. And then also I'm going to have this PowerPoint available for you. So I'm going to include a link in the email that goes out. That actually might not go out until tomorrow. If you need to get a hold of it and you didn't get the email, reach out to me and Jermaine. I would be happy to share it with you. So Jermaine, thanks again so much for joining us. Happy Friday. Have a good weekend. And remember everyone, until next time, happy trading.